Real estate investors, whether you're brand new or you're struggling wholesaler cash buyer, if you're looking for better ways to close more deals, you're in the right place. Each week, I pick a random house off the internet, I analyze it for a cash deal and a creative deal. This podcast was specifically designed to give you practical tools that you can implement right away. Welcome to the Corner Barn. I am Chris Thompson, that bearded guy, the creative guy, second generation realtor and investor with 19 years in the business. When I started this podcast, my goal was simple. It was to help beginners and struggling investors close their first deal or their next deal, all while using low to no cost tools to analyze properties and craft strong offers. This is the weekly deal analysis. Let's get into the show. Hey, real quick, before we dive into this episode, if you haven't already hit that like button, please do so now. And if you know somebody who else might find this valuable, please share it with them. I appreciate you. Let's go analyze this thing. This week we are sticking in Nebraska, but jumping to the east, I think, to from where we were last week. This week we are sticking in Nebraska, but we're jumping east to Omaha from where we were last week. 2114 G Street in Omaha, Nebraska. They are asking $220,000. It is a 3-bedroom, 1.5 bath, 1,300 square foot. It's been on the market for 280 days. Not sure what's wrong with this thing, but clearly the market has said it's not worth that or no one's willing to pay that. So let's go look through these pictures and see what we can analyze from there. All right. Looks like it's cleaned up out front. I don't like all of these tree branches that close to the house, especially after you just looks like they painted everything outside. Looks like they painted everything inside. New carpet. Probably older cabinets, just with new hardware and painted. Stone countertop, nice backsplash. Uh, Good sized kitchen. Not huge, but there again, it's only a 1,300 square foot house. Gas stove, bedrooms, I'm sure. This looks like the garage. I'd be willing to bet this is a basement, bathroom, half bath, washer and dryer hookups. It is a walkout basement, so that is definitely a good thing. But yeah, these tree branches, I don't like them this close to the house. HVAC. All right, so pretty reasonable, clean house. Not a large yard at all, and not much usable yard on top of that. All right, what else are they telling us here? Built in 1912. So it's been on the market for 280 days, and it's only got 98 views. There's something we're not catching here. Great 1.5 story, new kitchen with quartz countertops, ceramic backsplash, new appliances, large pantry, living formal dining. Match garage with door opener. Doesn't look like it connects through to the house though. House has been painted inside and out. New flooring, backyard fence, close to schools, new roof. Um, Ready to move in. All right, so lots of updates, and honestly, I'm pretty sure this is a flip, but we'll learn a little bit more about that in a second. Where are we at here? Looking at the experts and what they're saying, 218, 222, 186. I'm leaning towards this because it's been listed at 220. I'm not sure for how long, but we'll figure that out in a second. So I'm leaning towards this is going to be our ARV or after repair value, but let's keep digging. Median list price in the area is 205. Average sold price is 195 in 40 days. We're nowhere even close to those metrics. What do we got here? 22nd Street. Let's see when this sucker closed. 2020, that won't do us any good. Too old. 2016, way too old. When I'm looking for comparable sales, I am generally looking for something within the last 3 months. Um, I start out roughly you try to get as close to as you can, and that will help with your appraisal. If you want to know more about that, just drop a comment below, and I'm happy to answer that for you. All right, I'm not finding anything recent sale on here, so we're just going to use um, this 186 as kind of our placeholder as we keep looking. Permit. Oh, here we go. So they listed in May, been chasing the market down, and they bought it, removed it too. Like these current owners bought it in 24, so September 16, 24, and then they had it back on the market. Yeah, this is a really quick flip. So they paid 135 plus some closing plus the renovations. I would guesstimate around, since they've been sitting at 220 since October, just using my experience, I'm saying that is their break even number and they're not really willing to go lower than that. So that I think is going to help us use our cash deal to really promote a creative deal. And we'll dive into that here more in a second as well. All right, so clearly not worth 220. They're probably into it somewhere in the neighborhood of 200, if not a little bit more. And they started at 250 and been chasing it down since here, or excuse me, since May. Yeah, so they've been not doing so hot on this thing. Property taxes here are pretty super low. I like that. It should help with our numbers. Um, unless there was a new roof done recently. The last time the roof was done was 2013, but the agent in the comments said a new roof was on. And it is currently 2026 at the time of this recording, so that roof is not new. Um, updated this stuff in 16, which is nice. See what our similar homes are. All right, so we're all in that same realm, same range. Anything under contract nearby? All right, nothing under contract. Anything? All right, what about rents? Can we get an idea of rents? 15 to 16. How are they saying that's an apartment? And these are all apartments. I'm guessing on something like this, we're going to be around 14, 1500 maybe. And I don't know this area at all. So by all means, please check with a local that actually knows that market. But I think we're going to go with our ARV or after repair value of 186. And our rent price, we're going to hold off on that, see if we can't pick something up off the Invest Nest. I think we've pulled everything we can out of here. Now we're going to jump over to the Invest Nest and break this thing down for a cash deal. I've got it pulled up here on the Invest Nest. I love this site, super user friendly. I will have a link below if you want to try it out. First week for free and 50% off your first month if you use my link. Use it, love it, try it out. If you don't like it, great. If you do like it, great. I hope it's helpful. Estimated rents 1450 and doesn't look like they have a mortgage on this. So we're going to dissect through here. One thing that they do include is skip tracing. I'm not interested in this property, so I'm not going to. Finance details. Yeah, no current mortgage. HELOC in 24. Wow, that's a big HELOC. But yeah, it does not look like there's a mortgage against the property. But for 135 in Yep. So that matched what we were talking about. Closed at 145. Okay. So it actually sold for more than it was listed for. I think these buyers or current owners are in trouble. We will call this the property address, G Street. Purchase price. So I know you watch the show, and if you're new, welcome. For our cash offer price, we're going to figure out what our ARV after repair value, what we think that is. And then we're going to dissect into the next step, our MAO or max allowable offer. I'm going to take 70% of the ARV minus repairs. I don't think this house really needs any repairs. It might need some minimal, but for this purpose, we're just going to say it's perfect, it's move in, we're not going to do anything. So to get 70%, I'm going to pull up my calculator. 186 times 70% gives me an offer price of $130,200. Closing costs, we're going to offer to pay both sides. So that's going to be roughly 4%. Our lender is going to charge us 2 points, whether you're using a traditional lender or a DSCR lender, debt service coverage ratio. They basically just look at what that property produces and they base the loan off of that. They don't look at any of your personal documents. Improvements, we said we're not touching anything. Down payment, I think we leave at 25%. Rates are roughly, I think, 6.5 for investors right now. Term, I want a 30-year fixed. And our rent numbers, Realtor wasn't telling us anything, but now we're going to go check on 2 other sites and we'll jump over there now. This is Rentometer, phenomenal site. Rentometer, Rentometer, whatever you want to say, just .com. Phenomenal site. You can pay for it and go very in depth and analyze all kinds of different stuffs. Or you can do a free trial. Or if you're cheap like me, you can just play around with it and do kind of a 1 or 2 off. And I use it for this podcast. But overall, phenomenal site. And if I did a lot more of this, I would pay for it. Let's see what they're saying. No rent data. We had that same problem last week. I'm gonna pull up a new thing here, maybe. It's a brand new site. Uh-oh, wrong button. All right, fresh page. Yes, yes, yes. House. There we go. All right, so this is saying an average of 18, which is pretty awesome. So the InvestNest was saying 1450. This is saying an area average of 1871. And now I'm going to check one more site to see what they are offering as well. And that is going to be this site right here, the HUD or Section 8 website. I will drop a link for everything below and it will be down in the description. For a 3-bedroom, they're saying they will pay a max of 1570, which is a pretty good number. So we're kind of all over the map with these numbers, 1450, 1871, and 1570. We're going to kind of shoot the middle here and just go with basically splitting the difference with all of them and do 1650. Does that sound fair? All right. And again, I'm using a bunch of free stuff online. Talk to a local. Let's come back here. We're going to say 1650 or our potential rents, property taxes. That looks right. Insurance, I factored in $1,500 a year, which is $125 a month. Property management, 10%, pretty standard across the board. Our tenant's going to be paying our utilities, so I'm not going to factor that in. Reserves, I call it my war chest. Repairs and maintenance, vacancy, and CapEx. Take 15% off the top, put it in a separate account. If you want me to do a video on how I break my funds down, Certainly happy to do so. Great book that I learned a lot of this stuff from is Profit First. For me specifically, Profit First for real estate investors. But great book, very detailed, very great information in there. We will keep our appreciation rate for the property at 2 points. I like to raise my rents about 2.5 points a year. And we are real estate investors. We don't pay full commissions. All right. You ready to see what this number looks like? You were waiting to see a number, weren't you? You think it cash flows? I don't know. But to move on to the next step, if you haven't already, hit that like button. If you know somebody who might be interested, share it with them as well. Now, let's see if this thing cash flows for a cash deal. Bingo! This is one heck of a cash deal. $385 a month for $40,000 out of pocket. Yes, I am rounding. Cap rate 9.23, DSCR. The ratio they generally look for is at least a 1.2 or 1.25. This one is a 162, cash on cash, a little over 11 and a half. And your ROI, return on investment, is almost 21%. So pretty solid numbers there. If you follow the 1% rule, it more than works. Another thing I love about the Invest Nest is it breaks all of these numbers down. So I got almost $250 a month going into reserves or my war chest, property taxes, management, insurance, total costs, total expenses, total income, and even down here. So if we plan to hold this thing for 10 years, which is the analysis we're doing, it's almost a 21% return, cash on cash. Those are great numbers. And so they break all kinds of stuff down here. So basically, not even a full 4 years, and you have all of your capital back from what you originally put into it. After that, it's an infinite return because all you're doing is using other people's money. This thing is a pretty fire cash deal, but now we're going to jump over and do my favorite part and analyze the creative side. This is my creative calculator. You can get it off my website, christhompsonteam.com, and I will also drop a link below in the description. All right, we are going with an ARV, we said, of 186. And creative, I'm going to try to get a whole lot closer to that price. So just to figure out what I can try to figure out and see how I would need to structure a creative deal on this, I'm going to say, let's try to work it at the 186, especially because they're already asking 220. And then I will offer them a 4% rate. Now to figure out my PITI, or principal, interest, taxes, and insurance, my mortgage payment, I'm going to jump to Bankrate. This is Bankrate. Love this site. It's one of the free tools I use. So our offer price is 186. I only want to put down 5%. My interest rate, we said, was going to be 4. And 68107 is our zip. And to check our taxes, 108. Oh, one. Taxes are 108. Insurance 125. All right. Our total mortgage payment, or principal, interest, taxes, and insurance, come out to $1,077. Plug that in over here, 1,077. And our potential rents, we said 1,650. Boom. Cash flow positive. We like it. Gross cash flow of 573, war chest 247.50, management 165, which leaves us with $160.50 profit each month. It's a little low on the profit. And there again, if you are local, you don't need to manage it, or you don't need to hire management. Do it yourself, especially starting out. Rents increase and you can work it into the system, great. But that just doubled your net cash flow into your pocket if you manage it yourself. So our cash to the seller on this creative deal is $9,300. Agent commission, this agent is not really doing much. I think we try to throw $500 at him to make him go away. Assignment fee, we are not working with a wholesaler, so that will be 0. closing costs. Uh-oh. Oh, I checked my math up here. Yep, hang on. It messed up my formula. So I'm gonna redo the formula here. Hang on one second. Equals sale price times 0.04 equals. That should be correct. So 74.40. You double check the MS nest to see if those numbers work out to the same. And yeah, that's about right because they have more stuff tied into this. All right, we're gonna go with that. I think I got the formula right. Um, Cost of renos, we said we're not doing any. And holding, why did all my stuff delete? It's just, I messed my formulas up somehow. All right, so 2 months of holding is just 2 months of this mortgage payment. And why do we hold 2 months for that? 1 month of vacancy and 1 month for an agent to find and place the tenant for you. So 2 months of holding arrears, we're going to say is 0 because I don't think they have a loan on this. And a good TC or transaction coordinator costs you about 1,500 bucks. So cash out of pocket is about half, and the net cash flow is a whole lot less as well. And that's offering them what we truly think it's worth with a 4% rate. So at this, they're still going to get close to, if not higher than that 220 in their pocket. And that's one of the things that a lot of people miss when trying to negotiate a creative deal. Typically, I use my cash deal to push my creative deal. My cash deal generally is so awful that it's kind of like the contractor I don't want to do it price. If I get it, sweet. But if not, then I use that to push the creative deal. So we can play with the rate, we can play with the price, but ultimately, I think this is a pretty solid creative deal. I would like to see the cash flow a little bit higher. So maybe I take that interest rate down by a point, or I knock 20,000 off of the price. Or another way to do it would be 0%. Give them the 220 and 0%. I've seen it happen. I've done it myself. What did you think about G Street? Cash deal, fire, creative deal? Pretty good. The biggest difference between the two that I'm looking at is the cash out of pocket. The cash deal was about $40,000 and the creative deal was about $10,000, $11,000. So which one would you prefer? Drop it in the comments. I would love to hear from you. That's going to conclude this week's episode of the Weekly Deal Analysis here in the Corner Barn. I am Chris Thompson, that bearded guy, the creative guy. We will see you next week.